All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for August 19th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 443. My name is David Kosmeter, and I'm the creator of Timing Research, and you should be seeing my screen right now. But today I've arranged for Michael Filighera and Sonny Harris to join us again. And the option professor is back to moderate, so I'm going to turn it over to him.
Okay, thanks, and welcome to the new week we have here. And we've got a lot to talk about because this market has had a V-shaped turnaround. And we're going to start talking about exactly if that V is going to remain or if maybe it won't. So we are going to start. And of course, we got a lot of news coming up in September, which is only like a week off. So there's going to be a lot of action. Again, on the first Friday of September, you got the jobs report, then you're followed up with CPI, then you got the Fed decision on the 18th. So I wouldn't go to sleep at the wheel right now, that's for sure. Let's start out and talk about today on the S&P. We're up here at 55.85, I guess. And
Yep.
Michael, let's start out with you real quick. And what's your feeling up here?
It's it's both a good feeling and a bad feeling, Jim. No. I feel that the S&P is at a very critical juncture. And what I mean by that is like we could just stop right here, turn and drop like a stone, go back and and go below the levels that we saw just a week or so ago, or maybe 2 weeks ago. Back down towards 5,000, in other words. Or the market is done with that correction, and now we will go to additional new all-time highs, which of course are going to take it above. Let me see. David, I need to see the top of your chart.
57.21.
There you go. Thank you so much, Sonny. Above 57.21. Now that would be, that's the ES, or is that, no, that's the SPX. Yeah, 57.21 above in the SPX to complete on an Elliott basis, a minor fifth wave, which would on top of it complete an intermediate third wave. And we get another spillover downturn. And that could come on the wonderful September news.
And there's a gap there also that is worth noting, a little bit above the high of the 17th, which was 56.22, and the low from the day prior, which was 56.39.
Yeah.
So that could also be an attractor that could be interesting as well. Sonny,
Absolutely.
what are you seeing up here as far as the way you're looking at it? I mean, do you think this thing is just gonna fill that gap, keep going? Or is that RSI telling you maybe that this has got a divergence developing that could be interesting in the weeks ahead?
Thank you. I don't use RSI. I use my Sunny bands and the dynamic moving average. And we are fast approaching the upper outer band. And I'm thinking, and it's at, let's see, 56.61. And I'm thinking that's where we're going. And then at that point, it'll either continue on, I'm with Michael, it'll either continue on up real strongly or it'll fall right back down. And at least to the DMA. And the DMA is currently at 54.81. So that's could be quite a drop.
And that 5,700 and change must have been the future, because I got the high at around 56.70 on the all-time.
Oh, yeah, I'm looking
it is the future, Jim.
Yeah.
It is.
Because 56 about 70 looks like it might have been the peak on this one. Something like that. Yeah. So anyway, yeah. So it does look like it's a binary event. Basically, would you guys say it's kind of going to be kind of binary? It's either going to be, filling that gap and blowing to new highs, or something's going to be announced that's going to get, people a little bit more concerned. And there's some gaps underneath now on that I see on the charts that I'm looking at. You got a gap with the 54.36 high and the 5,500 low. So that's a pretty good size gap, isn't it?
It is.
Well, I'd like, if I'm sorry, Sonny, if I want to add one additional thing, which has nothing to do with the news and has nothing to do with the Fed or anything else, or even gaps. It has everything to do with, and Jim, this is your backyard, It has to do with the flows, and that's the capital flow, the options flow, the gamma flows, all those different things. When we put them together, they're used. There's models that have been produced that give us levels of where resistance should be found. And now going back to the SPX, the next very important level, and it's doubled up. It goes from 55.99 and then doubles at 5,600. And we have these positions that should provide resistance. At 5,600 and 55.99, there's three levels of strong resistance, all gathered right there. Now, if they go up and they just puncture a hole in it without busting it open, then it holds and the market tumbles. Now, in my opinion, if they bust a hole through it and shatter it, what it does then turn around and cause is a massive adjustment, because there is a lot of short gamma there. And that short gamma, when it gets broken and you hang on to the position and the market continues to go up, you don't get long along with everybody else, you get shorter. And dollar for dollar, you're short and short and short. Depending on how big you are, you could get very short very quickly. So if it goes busting through, well, then we're going to see a lot of adjusting, and that's going to force the market likely to 56.50 and then on up. Because it gets a little bit less, those levels get lesser, but they will get moved very quickly. So in other words, if I'm considering that we have a call wall at 5,600, that call wall is resistance, right? So why is it resistance? Well, they got a bunch of short calls there. And
which
so
would mean to you, which would mean to you that if the market makers can get it through 5,600, get all those shorts to buy in, then they'd be selling the calls up at the higher price, and then they drop it after that.
They could, but I actually don't mark them that cagey, because these are the big traders that are putting it there.
Yeah.
These are,
well, obviously the market makers were buying at 5,100. It wasn't the public. The public was underneath their covers or underneath the bed, hoping the world wasn't going to come to an end.
Yeah, that's a good point.
I've been in this cycle long enough to know who's on one side of the trade, and when it's at 5,100, right, it isn't John Q. Public going, "Hey, I'll step in front of that."
Yeah, well, you're right, because there's a lot of dealers out there as they go through these things and they come in and they're just doing their vol trade, which is selling volatility and buying the vol of all the underlying stocks within the SPX. Then yeah, it's the dealers that have to go sell those calls, and then they have to then hedge it by buying the index. So it's a lot of that's in place. I agree with you. And in terms of who's holding those shorts, it is dealers.
And the side of the market right now that's weakest is the sell side, because the volume is kind of light. And so if you're doing the algorithmic things, you just keep pressing the upside. And these people who are either short or whatever, they are folding like a lawn chair. You know what I mean?
Yeah, I do.
Because we're up 30 points on absolutely not too much news today, I don't think.
Not too much news and not too much volume.
Yeah. So the bottom line is they just press them and press them and press them, and all the people that are trying to sell the market and put a tight stop in, they're getting whacked out every 2 seconds here.
Well, isn't it something to say that just a short 3 weeks ago the VIX was at 64?
Yeah.
Right.
Well, that was the abyss. That was the abyss. That was when everyone in Japan thought that
the world
the recession was imminent. And what you don't want to be involved in is borrowing money and buying stock right before a recession hits. So I think that got people a little bit of, hey, why don't you get me out of those stocks? I think the party is over here. And so when they all want to do the same thing at the same time, and Citadel and people like that are on the other side, you'll notice the prices will get pretty darn low pretty fast. And it wouldn't surprise me that they're raising the offer here as much as they can, with all the enthusiasm about rate cuts and all the enthusiasm back with AI. And so
I agree. But one I'd like to get your opinion on something that I've just noticed, that the VIX itself is trading at 1477. The future's trading at 1488, which puts the future at a little bit of premium. So
Yeah, well, my
this,
thing on the VIX is I wanted it to, if you want to play the VIX right now, it's very important the VIX stays above 14 if you think there's going to be another drop. Yeah, because the longer it stays under 20, that's when big money has no problem committing funds. Because you know what, when you're under
right,
20, the market's stable enough to say, okay, I'll put 100 million in. When the VIX is up at 65, you're not going to find a lot of people
right,
doing
they're
that.
not going to do it. No, that's a
And
good
so,
point.
but the thing is that if it holds this area of 14 and we get into September and the information on jobs or the Fed cut or the CPI, don't conform to what everyone's bet on, that would be the time where the VIX could get above 17. And if it got above 17 or 20, it could be back on the bicycle. So right now, this area of 14, 15 is kind of the area where it would be about as low as the VIX would get if there's probably going to be another sell. If
Right,
it stays down here, then you're right that we're going to go through the highs and people are just going to commit money and commit money and commit money.
right. No, no, right. But right now, this is the first time I've actually noticed this. Usually, uh, cash is above the future, and the futures market, someone is stepping in and buying it.
So would that be indicating that the VIX is near a low point and will rise, or is it saying that the VIX is going to even go lower? What is it kind
I
of telling?
feel that someone is stepping in and reversing the trade. The vol trade, the dispersion trade
So
that they
so
do.
they're believing the vol will stay low then, and
No,
they're
I
they're
think they're
they're.
believing that this is done and the vol's going to flip and go higher.
I got you. Yeah. Well, again, that my stuff says basically 14 is your floor, and as long as it's above 14, and then if you could get above 15, 16, 17, and get the march to the higher price starting, then it could start
Yeah.
accelerating.
I mean, I think the other time before when we did see that huge jump in volatility, it happened at the opening of Globex on a Sunday.
Yeah.
So you don't, okay, what happened if they do that again? You just kind of walk in on that Monday morning and just like, oh, when I went to sleep on last night, the volatility was at 15 or 17 or whatever it was, and now I wake up and it's at 44.
Yeah. Well,
So
the thing is, I was looking at the VIX. I thought it was going to do a repeat of April because after the first
right,
quarter earnings came in April, the VIX went from 13 to 22, and then here we went from 11 up to like 20, up to like 20 almost,
right,
and then this thing from 20 to 65 is just a liquidity crisis that nobody really wants to talk about. Obviously, there was a liquidity crisis for a period of time there because
right.
that's how you get to 5100 so fast because people were unwinding this Japanese carry trade, and they were doing
Mhm.
it with huge volume
Right.
into a no buyer environment except for the market maker, and that's when that VIX will just explode like it did.
And
you know
sure did.
and they didn't again, they know that people will not stay in the stock market if the VIX is above 30 for any length of time. So the plunge protection team or whoever they are, obviously did what they could to stabilize things as well. So,
Mm,
and of
okay.
course, the ISM number getting above 50, it threw the recession talk out the window, and then the jobs report showing that the claims are still quite low, and then the retail sales coming in twice what was expected. I know this is all fundamental stuff, but it's the kind of stuff that backs the story that the recession thing's off the table. So,
Okay. No, I'm kind of chuckling because I agree with you.
yeah.
And
Let's talk, Sonny, let's talk about the QQQ and the
Okay.
SMH and see what those guys are doing, because there's been definitely a recovery in the tech sector.
Mhm. The QQQ is above the flat DMA, which is bullish. It's at the upper inner band, which is also bullish. And we've got an attractor overhead at just above 501, 501.50.
Hmm.
And I think that's where we're going.
Yeah, it's got two gaps, one at 480 and another gap above 490. So it's got some
Right.
attractors coming from that as well.
That's right.
Uh, and the RSI either looks like it's on the verge of taking off from the 50 area, or it looks like it's going to have a huge divergence. So, what's on the lower end of your sunny bands? Like, in other words, if it started to break under what kind of prices? Because right now I got a pretty important number around 472. and then of course at 462. But
I'm
what are your sunny bands saying? That the floor might be cracking a little bit.
464. It would hit the DMA again, and
Mm-hmm.
it may or may not go down from that point. The flat DMA like this means congestion. So you have to be really careful when we're in congestion and watch very carefully so that you can get it when it comes down below it. So a close below 464 would be bad news for me.
Yeah, I would think so. And then really bad news would be closing underneath 455. That would kind of take the thing. I guess one of the things, because you're not using moving averages, but you have some formula that you use that factors in some kind of an average a little bit. Michael, do you use the moving averages a little bit?
I do.
Because I'm looking at a deal here. I mean, it's one of two things to me, because my averages are all inverted to the downside. The price is above all the averages. Obviously, that's a good thing. But the fact that they're all inverted to the downside on the 12, 24, and 36, that's not the setup for some big sustained up move. Do you understand what I mean?
No, yeah, I do. But on my 4-hour chart, what's your time frame on your chart?
I'm just using a 1 year.
Okay, so let me go.
Yeah, on the 1 year, the moving average. Now, like I say, the
You're
12 is
right.
turning up, and it ran into the purple, so there is some bullishness to it. There's no question. It's very binary, like Sonny's saying.
Yes,
This
I
thing
think that
could go up and take out highs and keep going. But I'll tell you right now, if the news were to change and these averages are all still inverted to the downside, to me, it means that the trend, the prices have turned up, but I don't know that the trends have turned up on the 1 year.
um, I've got my 1 year, which is a daily, and I have the 13 crossing the 50 today.
At
So
what
now
level?
pointing up. And the 20 is not far behind it. Now, if we can get the 20, now not only do they have to get above that 50, but they have to keep moving above the 50 to realign the moving averages to what you're suggesting, that we're in a position to continue to go up, in fact, break out.
Yeah,
And it
because
would
if you're
have the
going to get a
support.
big sustained move, and what do I mean by that? I mean like last October when you go from 370 and then the train runs steady to 440,
Right.
or and then it has a drop, and then of course the train gets going again at 430 and it runs pretty much all the way up to 500. Now
Agreed.
to get that type of activity, generally you have all these averages inverted to the upside and rising.
Right.
And that's not what I'm seeing here. So my caution comes from the idea of, like, are they just going to blow this thing up to 510 with all these averages lagging behind and pointing down? Or is this a situation where they go up to 490 or something like that, or maybe 500, and get everybody very excited, fill these gaps, and then they announce things in September, which is a historically tough month? And do they do something in September that gets people back on their heels? That's the question, really.
Yeah, I watched the 21 and 55 moving average, simple moving averages, because
Right.
Fibonacci
Right.
number. And right now the 55 is above the 21, so that's a death cross. But the
Yeah.
market rose anyway with a death cross there.
Right. Right.
Yeah, that's what I'm seeing. Yeah, that's what I'm trying to say is, again, I think people are definitely thinking that whatever occurred on August the 5th, which is all of what, a couple of weeks ago,
Yeah. Yeah.
is absolutely ancient history.
It's
It's
just
right up
funny,
there
but you're
with the
right.
Romans and Socrates in ancient history. You know what I mean?
Yeah.
Yeah.
Yeah. I mean, it's so true. And it does what it does. There are a lot of factors kind of at play here, but the one that it tends not to fool would be our moving averages. And Sonny's using simple, and I use EMAs, and they're both kind of the same thing. Like I said, the 13 is trying to poke its head above the 50. The 20 is right behind it. If they can be successful, then technically the daily and the moving averages would be in alignment for a continuation to the upside. But the fact that they're so slow and they're really behind each other a little bit really gives weight to what you're saying, Jim. That it could just as easily turn and drop. And the Elliott pattern actually shows that too. It's just at a very,
Because
very
going into the Labor Day holiday, historically the market does do pretty well. So we have got until next Friday, which
right.
means you've got 9 trading days for maybe this dance to be completed. And then once you go into the Labor Day holiday, you're going to be faced with that jobs report on the Friday you get back. Then you're going to be faced with CPI, and then you're going to be faced with the Fed. You know,
I think it's like what's going to be important is how deep is this narrative that lower rates are great for stocks. It's like only
yeah.
in
To
the
be honest
period
with you,
that we're not in.
yeah. Did you look at some history on that? Because when they start a cutting cycle, the lows in the stock market average is 470 some odd days afterwards.
Absolutely, I agree.
Yeah.
Because
So
if
the
you've
thing
got a
is
period,
people
long
don't
period of
understand it.
inflation,
Yeah.
what's the solution? Deflation.
Yeah.
Right.
Well,
Yeah.
lower rates are not. It's all part of deflation.
Yeah.
Well, we're gonna have to
Um,
have some deflation to get prices of eggs back down again.
Amen. For those of us that live in California.
yeah. Now, what about the SMH? Let's put that up there, David. That's the semiconductor, which everybody loves because it's so wildly wonderful for such a long time. Then it went into the tanker very much going from, on my stuff, it did the double top at what, 280, and then it came all the way down to my long-term average at around 200. So that's a
Right.
pretty good bite out of crime, huh? And now it's come back to a moving average. I've got really right, they're facing it right here at 250. And that's
I
where we
tell
are now. So
you,
I got some resistance right here. If it can get above it, great. But if not, it could also.
So do I. I've got resistance at 250 as well on the sunny bands.
Yeah.
yeah. This to me, Jim, is doing exactly the moving averages are negative.
No, they're all inverted on this stuff. Yeah, they're all inverted.
Exactly.
Yeah.
Exactly.
Yeah.
This one, the SMH, way more than the Qs. And from what I'm looking at, and I'm looking at EMAs, of course. So I mean, they're still the 50's still kind of running the game up at the top. So the 50's on top, and then the 20 and the 13 are just kind of starting to cross each other. So no, I would have a different. I think
I think I think you might be looking at a very nice perfect storm here because, we're going
yeah,
into the holiday of the 4th of the Labor Day. Again, generally a nice up movement. And then you've got Nvidia's earnings on the 28th, right before the holiday. So
yeah,
this could be the, shall we say, advance that you get going into the holiday. And a lot of the good news comes out like on Nvidia and stuff. And then after the holiday, that September risk that's always there could come and raise its head at that point. So I would say that, if you're enjoying the ride on this rally, enjoy the ride on the rally, but definitely be somewhat aware that September can be a rough month, that a lot of the news is going to be out by then. Don't
right,
forget, once you start in September, all the earnings is out, and now you're
right.
just finishing up the third quarter.
And
And the bottom
October
line is, so the market may not have a lot of news to work on, except the CPI and the jobs report. And I don't see any. I mean, there's some firings here and there, but it seems to be a relatively firm labor market.
Oh,
And
for
the real
sure.
estate, certainly the real estate. I mean, that owner's equivalent rent was twice what they expected. So the bottom line is the real estate is certainly not backed off at all, and
Depends
so
on where you
basically,
live.
the CPI report may not be so friendly to it.
No.
And on Friday, we have somebody at the Fed speaking every day this week. And on Friday this week, Jerome Powell speaks.
Yeah.
So I'm thinking that might do something to the market. If he says, no, we're not going to cut in September.
Yeah.
Or we die.
Well, I mean, he's got to control the mob. I mean, I would consider it, it looks like the Capitol and thing with if the Fed with people going in there saying you must cut, you must cut. You know what I mean?
And
Yeah.
not just that, it's like they're going to go looking for Jerome.
Well, yeah, exactly. That's what I'm trying to say. He's now the new Pelosi in the Capitol building. No, the
Well,
point,
yeah, sad to
yeah,
say, but
yeah.
that's not a bad analogy.
I think there's a desperation by the people that are bullish, and I'm not bearish bullish. I just like to do whatever is the right thing to do.
Amen.
The point is that they need to get something that gives them a little help with these valuations, because the CAPE ratio is way into the 30s, which is a very, very high rate for the PE ratios. And one of the ways you can get help on that is you lower interest rates a little bit. And that, of course, helps your PE ratio analysis. And there's almost a desperation to see these rates cut. And I think they'd like to see some help on the PE ratios. So, that's why I think everyone, they got to cut. They got to cut. And everyone, there's one guy who made a good point. He goes, why would they cut? The unemployment rate is in the 4s, which is historically extremely low. Wages are still rising, albeit not as much. Retail sales are coming in double what they were expected to. And you've got the inflation rate still at 2.9. It's still 50% higher than your target.
Right.
I mean, at what point does this cutting make any real sense? Because the market has already adjusted rates in some respects. You know what I mean? I mean, the 2 years down at 4%. I mean,
Yeah, no, I agree.
they already cut for the Fed 1.5 points, because the 2 years trading 1.5 points lower than the Fed funds.
Right.
So, in fact, some people were saying that, if they start cutting rates, maybe rates will actually go back up because they've overcompensated with regards to how they've brought yields down already.
Yeah, I'm thinking that's a possibility.
And everyone is betting on the cut. I mean, I don't think there's been more of a consensus on anything since, than I can remember. I mean, everybody is just, the Fed's cutting. Oh, they got to cut. I mean,
And that's the point when you hear them starting to say they got to cut. Now, all of us are of similar age. We've been in the market for a long time. Let's just go back to when we've been in situations where we heard not only professional, but retail say, oh, it can't go down.
Yeah.
It absolutely won't. Not interest rates, the market. Oh, the market's not, can't go down. Not going to go down. No way. You got to be.
Always goes up in the long run, they say.
Well, how long is your run?
That's right. Look at the 1960s.
Yeah, right. But it didn't really go flipping and flying like it is now.
No,
I guess, in the
market now.
Yeah. I
want to take a look at a couple of other things here, and then we're going to go into our individual things here. Let's go with IWM, which is your small caps. This is the one everyone's been kind of counting on. This and the transports, I believe, are still underneath their all-time highs. And this thing, this gave up the ship pretty fast during that drop, but now it's climbing back up. But it gives you some idea on, first of all, I heard most of the companies in this index are losing money, so they're not profitable. And so,
and price is rising.
Yeah. So
losing money, but the price is going up.
Yeah, like I say, everyone's trying to jump on this thing because, again, they think, one statistic that made sense for the Russell is the PE ratio on the Russell versus the large cap tech is at the widest level since 2001. And after 2001, Russell outperformed the NASDAQ by quite a margin for like 3 or 5 years. So there's that thing that had me interested because, I do believe at some point the stocks are based on their earnings. And so the bottom line here is, from a valuation standpoint, they made a compelling case on the Russell over large cap tech. But, what do you think, Michael?
I think it's a very strange market, and I believe that the IWM is still got upside, but not really from where it's at. It's a very strange pattern. Let me just flip some. Hold on a second. I want to go over to see what I got. So if we go back to the April high, and then we came down, and about the 15th of April, we made a low below 6. And then we rallied up, came down, then we rallied strongly. And so I think we may have put in a bottom, and it's kind of like you get a 1, 2, and then you've got another 1, 2, 3, 4, 5 that takes you up to that high at just above 228, and then we flip lower. And I'm thinking that really that what we got going on is it's very strange. It's a very strange pattern that would be more fitting for the market to turn and go below 196 before it
Well,
goes.
it looks a lot like it did back in 20, is it 20? Because I got a chart up here going back 5 years. And
Okay.
if you look at 2021, this thing had a couple of highs, and then all of a sudden it made this weird move to 245. And then within a very short time, it was right in the tank. And here we have a double top here at around 210, makes this weird move up to 230. And if it
And now
starts
it's
getting under
dying. Yeah.
if it goes under 200 again, then I think it could be in larger trouble. So I would say that staying above 200 now is imperative, because if it does get under 200 and get the averages to roll over, then the downside could be, more substantial than you'd even think.
Right.
So
Right. I mean,
at least I know where the line in the sand is, and it's around 200 on the index.
I would agree with you, but just to kind of, David, do you have the ability to put on a 5-year chart?
For IWM, that's what's
Yeah. Oh, this is a 5-year?
Yeah.
Okay,
Yeah,
so
that
off
shows
of
that
that
little,
high,
yeah.
off of that high, we come down into nice little ABC correction, down to that low that we got in September, October last year. Oh yeah, October 23. And then what we got coming up, this is gonna what really, when it starts to get strange. The high that we saw just below 214, that's like wave one. And then we have an A wave down, a B wave, all the way up to that strange high above 220. What was it, 228? That's a B wave, irregular, but it's still a B wave. And it's in a wave two position, which a lot of people aren't accustomed to. And we came partially down, but I think we flip and we come down and finish that, which would
As
suggest
long as it can stay above that 200 number, I certainly would be, I wouldn't be uncomfortable being in it until it broke under 200, and then I would become very uncomfortable.
But see, I think that's what's going to happen. They'll bring it down to 200 to drop it below, and everybody will bail. And then guess who's underneath buying it?
Yeah.
The person that was selling it, or whomever that were selling it.
No, and the RSI there is definitely constructive. So it's not time to be negative on it, unless you're doing a predictive type thing.
No, but if we're looking for
the trend's intact, as long as you can hold the recent lows of 200.
But I don't think that if the Dow, the S&P, the NASDAQ really start to turn and move sharply lower, I think the type of move that we're looking for, everything will be in concert. Everybody will be together. So that's been a lot of the problem, I feel, that in a lot of these declines that we're getting. They're specific. They're NASDAQ. While the Dow is running up 400, the NASDAQ dropping, for its own reason. So it's disjointed in terms of, or not synced in terms of, they're selling the market. Everything. They're selling the market. And so I think that what we could get is that type of a turn where it's all going to go.
Well, Sonny, let's put up gold and get your idea on what you think of gold, because gold got above 2,500, and then where is it? It's still right around 2,500
Sitting
now.
Right at it, Jim.
25.39.
Yeah, a little divergence possibility there, though, if you went to that other chart.
I think we're going on up.
Just up.
I've been saying gold 2,500 in my weekly newsletter for about 3 or 4 weeks, and they got it yesterday.
Yeah.
And I think we're going on up.
Yeah, it definitely has a bid. And again, those central banks might be buying still because, they're trying to get a currency that, that's backed by gold, maybe, or something to be respected. That's backed by gold. Yeah. Because, they're trying to get that alternative payment system. But, it definitely, hey, listen, you got an uptrend there with the blue line, so you don't have to be from Harvard to figure out, as long as it stays above 2,400 there. I thought it was more like 2,350, 2,300. As long as those things hold, then it does look like it's trying to surprise on the upside.
Yeah, I think it's going on up.
Oh, I think, and I have to agree with you, Sonny. I really agree with you that I've now done some extensive work on updating gold. And it sort of looked very problematic until it started to really break out. And it's just a small pullback right now. And I think a lot of it will be, Jim, exactly what you're saying, is that they want digital currencies. In fact, it's
Yeah.
not that they want, they're going to get and have
Yeah.
digital currencies. So fiat's over and now we're going digital. Nobody, everybody's gonna be like, why would I accept a digital yuan or a digital ruble or a digital dollar? What's backing it? The good faith and credit of your countries? That no longer covers anything. Who cares?
Well, and the
Yeah.
thing about the cryptocurrencies backing it is that they can go down, you know,
But that's the other thing. People are so, it's like, oh, we'll just back it with cryptos. It's like, why? What's backing the crypto? It's
right?
virtual.
Yeah, I
Electricity.
mean, I think they're probably looking at the yuan or something like that, or they come up with some universal, shall we say, alternative to the dollar, and then the alternative has some backing on gold.
Well,
You know,
that's the
that
deal. That's
yeah.
exactly what I'm saying. I think
And
that
like I say,
China,
the dollar
Russia,
index, the
India,
dollar index has gone down to 102. And if they start cutting rates into a strong situation that inflation comes back, or that these deficits are off the grid and they're trying to lower interest rates in that environment, and the
right.
dollar breaks 102 and goes to 95, there'll be a chorus of let's find a new currency out there.
And so it could be all manipulated there. Is
Well,
that
let's
true?
put up the dollar index so you can see what I'm talking about.
Oh, I
DXY.
see. Know exactly what you're talking about, but that's a yes. I think we should show it.
Because this thing definitely peaked at 106, 107, and it's
Yeah,
definitely on the defensive. And if
yeah,
you go longer term, like you have a 5 or 10-year graph, you get an idea that there's an abyss underneath now.
yeah. There
So
would
like
be.
I say, you're going to see if it breaks this gold line that he's got up there, this thing can go down to, for all you know, 89 or something like that. You know what I mean?
That
Yeah,
would be
I've
this
got,
next support.
Yeah.
I've
Yeah,
If
got
it does, and if
100
it
and
does,
a half.
yeah.
Yeah, so
And
it's falling.
yeah.
yeah. So
And
the gold going up is not an odd thing if you look at the currency here looking like it's ready to fall.
absolutely correct. Yes, I agree. I agree with you.
And like I say, you got 3 points on the line there, though. So, right now it is crunch time. That's why I think that 102 area is kind of important, because if it
But I
does
think,
that,
yeah,
but if it doesn't, look, you still got a rising gold there. So, this could be as bad as it gets at 102, or it could be the beginning of the fold.
but I think the other thing that I think people should understand, it's like the markets, when we get into new high territory, never been here before, where are you going to pick resistance? Out
Right.
of thin air? So the thing is, like with gold, it is supply and demand. So, but I have fibs that go, I have 25, and then I think I got 25, 70, 79, something from there. But then it breaks 2,600. Now, just because it's a big number, there should be some people willing to take profit or whatever at 2,600. But in terms of people actually getting short gold,
There's
you
nothing
might want to
like
do
that
it via
happening.
a put,
Yeah,
but
yeah.
to actually try and short big numbers, no,
Yeah.
that's death. Because my numbers actually, and I'm just running Fibonacci. I have 2,700, 2,899, and then I have 3,000. And none of those are out of the realm of reality.
All those round numbers tend to get hit over and over again.
Over
Yeah.
and over, over and over.
2020, How about
Yeah.
we take one last look at the crude, and then we'll go to our individual talks on things. So what do we have on crude right now?
Death to Smoochie.
Doesn't like 80, doesn't like 85, that's for sure.
I know, right? Is it going to like 70? I don't know.
Yeah, probably.
But the thing is, hoping support holds is a lot different than taking out 80 and 85 and you're on the horse. You know what I mean?
Yeah. I mean, all I
Because
can say
if there's
is
big
that,
money to be made on oil, it's on the other side of 80 and 85, right?
yeah. Yeah. I actually used to follow crude, but I don't really follow crude anymore. Because no matter what crude does, the price of gasoline in the state of California just stays high.
Yeah.
Mhm.
Just I don't care. I mean, our taxes keep going up and all the rest of that nonsense. But
But
I
interestingly,
think,
the
go
price
ahead.
of gas in my neighborhood's been $4.89 for regular for
Yeah,
the last month and a half.
yeah,
I
Reasonable,
never,
right?
well, but I've never seen the price so steady.
Yeah.
Only it fluctuates with the price of oil.
yeah. And
But
that means
Election year.
it has
It's
stayed
election
there
year.
while oil went to 90 and back down, and So no matter what, because I agree with what Sonny's saying up here in Northern California, same deal.
Yeah.
The larger, like Chevron and those stations, it's over $5.
Yeah.
Our taxes are a little bit higher in San Francisco than I guess San Diego, but here we are.
We've
And
got
it's not budging.
eight
They're
and
not budging.
our
So,
taxes, our state taxes are whatever. I don't know what it is eight
out
and
of control.
no, is what's San Francisco's 8 3/4 here in San Diego.
No, San Francisco is actually 9 1/4.
Wow.
So
Plus
yeah.
plus 10% state tax on income.
Yeah.
That's 20% of your income, and then the other 30% goes to federal taxes.
That's why a lot of people like Jim moved to Nevada.
That's right.
We want to play golf. That's what we want to do.
It's
Okay,
120
Sonny,
degrees, I hear.
Sonny, you're gonna take over the screen. You're gonna show us what's going on with those Sonny bands, and you're gonna explain how you help people with your money mentoring. If you would, please.
I'm working on it.
All right.
Did you got my chart here?
Yep.
This is crude, and you can see where the current price is. And what I have here, the bands, channels around price movement are Sonny bands. Top bands, the upper outer, upper inner, lower inner, and lower outer bands. And the reason the bars are colored something different is because that's the night session, and I want to be able to distinguish it instantly from the day session. So I color them different colors. And the purple and gold lines in the middle are my dynamic moving average. And you can see as this thing goes along here, sideways, 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 it finally starts signaling that we're going down. But as long as it's sideways like that, we're just in consolidation. It's just choppy and there's no reason to trade it.
You have a couple of markets that you like, Sonny. You want to show the Sonny bands on, and you have some kind of an idea you like them, or?
Sure. I like the ES, but that's what I've been trading for the last 43 years.
All right. Well,
But and I also do really like gold. And there's gold. This is a 15-minute chart. Normally for analyzing these things, I'll look at a daily chart. And you can see it's come down a little bit off its high today. And the ES, are we daily yet? Yes. All right. So I think this is going to go on up to right here, which is the upper outer band at 5666. So I think that's where we're going before we pull back. And I think we will pull back. What else do you
on
want
the gold?
on the this is the S&P.
On the S&P. Okay.
Yeah. Yeah, I think it's going to pull back. But only after it gets up here to the upper outer band.
Yeah. You think it'll get to that level?
I do think it will get there.
Yeah.
In the next week, maybe. But, this market is nothing if not volatile. The last several months has just been painfully volatile. It's hard to trade on a 5-minute chart even.
And so when people contact you, Sonny, what is the kind of package that you kind of help them with?
Well, I do mentoring. I also have indicators, including my Sonny bands and several other indicators that I personally use to do my own trading. I've been trading for 43 years. I've written 9 books. 8 of them are about the stock market and futures and TradeStation and things like that. But I especially like to mentor because I like to see people make money. I am also an easy language programmer, so I do custom programming. And every Sunday night, I write the sunny side of the street, send it out to subscribers. And I do a live trading room every morning at 9 a.m. California time. And that's by subscription only, but I do open up the Wednesday meetings at 9 a.m. for guest passes. So people who want to see what I'm doing and see what it's like. And we are up 316% in the live trading room so far this year at $42,000. So that's exciting.
Yep, you bet.
I like these triple digit profits.
Bring more on, right?
Yeah.
Bring more on. Okay, so that's how people can get a hold of you with the moneymentor.com. And again,
moneymentor.com.
there's a lot of different things that you can help them with, including that trading room.
Yeah, I'd be happy to do that. And I like to talk to people. So my phone number is 760-908-3070. Just give me a call.
Sounds good. Michael, you want to take over the screen and put maybe some of these Elliott Wave and Fibonacci numbers up on some of the major markets like
Sure.
S&P, gold, oil, or whatever, and try to get some idea of where you're seeing things. Yeah.
Well, there we have. Let's see. I need to minimize that so I don't look at everybody. Do you see my screen?
Yes.
Okay.
Mm-hmm.
Right now in my trade room, I have joined forces with a colleague who actually started as a coachee, someone that I was coaching, and they picked it up pretty well. And so now we've joined forces, and he happens to be in Germany, soon to move to the south of France, but so it's more European than of course here. And so we have a trade room together. And right now, just so that everybody knows, I am running a promo, and it's giving a month for the normal price is $299 a month, and I'm giving a $99 discount to come in and give us a try. And what we do is we provide technical analysis. I'm doing that daily, and I post on YouTube. But what I'm adding is a lot of data, which actually is more usable intraday, which deals with call walls, put walls, where the volatility levels are, where volatility triggers sit, where gamma is sitting, and what happens when that different level, when that gets broken, what can we look for? Like, for example, in the NASDAQ, I needed it to break above that level of 19,000. I don't know exactly what it is. I have to pull it up. But it did, and it's running a little bit, not running a lot. So I feel that the Elliott wave right now, the big choice is like, this is the low. Let me just pull this out to the 4-hour chart. Come on. This was that high, there was that huge sell-off, and it took us down. But this is a box that I have had on my charts for a long time. And what it represents is I was looking for a minor fourth wave correction, and that's the color, right? So that color matches this color. And so, but if we listen to Elliott tells us that it should come within the price territory of the fourth wave of 1 lesser degree. Well, this is minor, 1 lesser degree is minute, and there it is right here. Now it came down and not only smacked it smacked it on the nose. This low was 17,454. Where did it get? 17,351. So pretty much smacking it on the nose.
Mm-hmm.
And then it started to take off. Now, the problem was July the 11th, and this is August the 5th. Well, that's not even a month. And so we started to get into conversation about, Fibonacci time fractals would suggest that it's not enough. There's not enough time, so it shouldn't have rolled out that fast. But as the market continues to roll higher, it brings it back into focus like it could have, and it may have. So that may have finished it. And what that would suggest is that this is not a B wave. It's a 1-2. We're in a third, come back in a 4, and we do a 5. We go up to new all-time highs. Same thing exists in the S&P, by the way. Not necessarily in the IWM, but it does exist in the S&P, and it does exist in the Dow. And so the markets can go ahead.
I think the 4 wave is going to scare people. They'll think the rise is over.
Oh yeah, well they could. And here, because this could be A of 4, this could be B of 4, and if we get up to these levels we're looking at, and I add into it all of the fact that it's like, we're just now crossing this on the 4-hour chart. That's the 200. We're just now crossing it. The 50 still below it. So that goes back to your statements, Jim, on what we're talking about. So that's more B wave, which means this stops, maybe gets up to 20,000, which will pull in every last person who didn't have any faith. And then it comes flooring back down again. And that would be the same thing in the S&P, and the same thing everything else. It comes all the way back down again. And then, get this, rallies back up. And now, two things. Even if it doesn't, and we go from here and we rally back up and we put in a new all-time high, and maybe we get above 21,000, maybe we get to 21, 2 or 3, 4, whatever the upper levels are there. There, I got some right there. That's just going to finish an intermediate third wave. And then we turn around and do the same thing all over again, come flipping back down. So where this is kind of, interesting, to say the least. So I just think that, I play it every day. I do have the trade room. And right now I'm having it's a membership drive. So I provide also the different levels that are really effective in our market now, particularly in the indexes. There are so many new ETFs. We all know that. And those ETFs are attracting millions, if not billions of dollars. So I would rather monitor the money flow, the capital flow from instrument to instrument, from market to market, to see where it's all going. And so as a day trader, what my goal is, it's like a big storm, and it's just like you're sitting in the middle of a tornado, and all around you is just a swirl of money. You just reach in and grab your trade and take it as you can get it. And each day you hopefully walk away with $300, $400, $500, $800, $1,000. And if you can successfully do that every day, I leave the positions to somebody else. So, but by using, it's actually Spot Gamma is the data. They run the models, but they're brilliant. They're brilliant. And so it ceases to really be bullish or bearish. And it's just the numbers. So I wrote a piece back in 2013 that said, don't panic, it's just a number. And at the time, I was writing it because I had my oldest trading friend call me and say, what the hell is going on? Because the NASDAQ was going above 3,800. Can you imagine what they're thinking now? Oh, no, the NASDAQ's going above 20,000 again. So, but it's the same method. It's the same argument. Don't panic. It's just a number. It's just a number, and that's what I'm doing. I'm just trading numbers. Algorithms, they're just producing numbers, the levels. If you understand what the level represents and what it means when it gets broken. And usually, it's like I said before, a big time to cover. They're covering, they're adjusting. And this whole downslide was nothing but adjusting positions, getting out, but adjusting. And then they had to redo it. The volatility trade, Jim, that's where it started. And you can just see what it did. It took it from 17,740 to 19,720. That's the volatility trade. So again, you can reach, if you go to www.tradershelpingtraders.com, and then there's a trade room tab. Go to that trade room tab. I've just rewritten all of that. And so there is that discussion about don't panic, it's only a number, but also I go over what we are doing in the trade room, what technical analysis that we're, and what I'm adding and what we're adding into it, which makes it of higher value. So, and my focus is I'm really going for people that are trading. I'm looking for traders that maybe trade day trading, that maybe swing trade. Position traders, you might have a problem trying to follow, simply because the market does flip and move very quickly. So that's my spiel.
What time frame charts do you use in your trading room?
I use a 5-minute, 2-minute, and 15-minute. 2-minute is what my trading, that's where my trading platform is. And the 5-minute and the 15-minute, I'm just balancing moves and also candles, because we also read the candlesticks.
I'm
So,
using, in mine, I use 1 minute, 5 and 15.
yeah, I mean, I've tried using the one, and I envy people that they're very accustomed to it, so they do it. But I find that just putting it on a 2 smooths out so many problem areas for me.
There's a lot of jerkiness in the one.
There's a lot of jerkiness.
Mm-hmm.
Yeah. So that's why I use the 2. And I know other people that they've pushed it out to a 3
Oh,
just to kind of smooth it out. The 3, I think I'm lagging. You
yeah.
know, I'm late. So, but that's kind of what we're doing. And we just continue to push higher. And I'm going to tell you why. Because we broke levels in the S&P. We broke them. We went above them. That's forcing the correction. That's forcing the adjusting in those positions. And the same thing is happening here in the NASDAQ, just not as strong. But in the SPX, it's still got a ways to go. But if the SPX breaks above 5,600, do not get in the way. Do not
Yeah,
get
no,
in.
that would be very, very powerful.
I
And did you
think
put
it
your
will.
contact email and everything up there, right, Michael? So people
I
can
believe
get a hold of you?
that David did that for me.
All right. And David, do you want me to go into a little bit of the option professor now, or do you want to go 5 minutes after, or what do you want to do?
Yeah. Yeah, let's close out. Well,
You got 2 minutes.
yeah.
I got 1 minute and 15 seconds before my clock announces the time again.
Okay. Yeah, so yeah, this will be the close of the episode, and Jim's going to, so everyone in the live room, go ahead and stick around. And if you're watching the recording, there'll be just a few minutes extra here of some presentation about Jim's service. So yeah, we can do that next. So, but so all right. So
anyway,
technically,
Sunny. Oh yeah, Sunny and Michael. Very good to have you with us today. Everybody knows how to get a hold of you guys, so they can take advantage of the information you provide. That's important. And of course, we went over quite a bit of the market, so I'm sure you guys came away with a lot of insights that we were able to give you. So thanks, Sunny and Michael, for being here as always. Of course, we'll be doing this again, so that's good.
Thank you so much, Jim.
Thank you.
Thank you again to Michael Filighera of logicalsignals.com and tradershelpingtraders.com, as well, and Sonny Harris of moneymentor.com. All right. Okay, so Jim, we'll switch over to your.
I just have to hit the share screen and we'll be all set. One there.
All right, so stick with us for this short extra add-on presentation about the Option Professor's alert service.
11 o'clock a.m.
Sorry about that. All right. Thanks, David. Thanks, Jim.
Thanks, Sunny. We'll see you guys.
Thanks, Sunny.
Good to be with you, Michael.
Okay, so we ready to go, David?
Yes.
All right. So anyway, I'm going to be brief just to get to the point here, and David's going to put up an icon. Hopefully, that'll show you how you can get involved if you'd like. This is the Option Professor Alert Service, and it's something that the Option Professor issues through TradingIndicators.com. And basically, I just wanted to show you very briefly how I come up with these ideas that I do, and exactly why I think this is a very good approach. The alerts go into a number of different strategies. The one that I try to focus on is called the strangle. Strangle means you're going to do a call and a put at the same time on the same stock. Okay. And so basically, I try to do them before events happen. So I'm just going to go through a large group of stocks that in the last month or so, we have had situations where the idea that we came up with worked out quite well. They don't, obviously not every idea is going to work out, but these are some that have been worked out handsomely. Back in June, Apple was trading 195, 185. We looked at the 200 call and the 190 put. It was called right before they had the Worldwide Developing Conference, and bang, those calls went through the roof when we went to 220. Then we were over here in the 220 area, and we thought it would either go up towards the 235 area or revert to the mean. So we had a 227 call, 227.50, and a 210 put, or a 207.50 put. The big drop to 195 obviously made those puts go up in value quite a bit. Then the earnings started to come out. So some of the other large moves that we caught with our ideas was Taiwan Semi. Taiwan Semi was up here at 190. It was diverging as far as the RSI is concerned. So we respected the idea it could go up by, the idea was a 215 call and a 180 put combination for about $5. And of course, reversion to the mean occurs. It actually went through the mean, but the move down here made the 180 puts $30 in the money. And again, if they don't move, you lose on both sides. That's the risk. A couple of other ones, JB Hunt, JBHT. These were all earnings ideas, meaning get into something before the earnings report. Before earnings, JB Hunt was down here. Our idea was the 170 call, 150 put for $2.69. And then the calls went to $7 or $8 when we jumped above 175. So that's another classic example of you get in when things are tight, and if you get volatility, that's what the strangle game is all about. A couple of other ones here. Intel. This was a big surprise. Intel was trading at $30, right? And right here before earnings. So some people like myself thought it might go up to 36 and revert to the mean. So the $32 call was combined with the 28 put for $1.75 or so. And obviously when you drop to 20, the 28 puts are in the money by 800. So that's quite a nice jump for a very cheap put. Again, the strangle, you will lose if the market stays flat in between your strikes and the time runs out. If you get a big move like we've had on some of these, it's been pretty good. Last week, we thought that Cloudflare would make a move. Why did we think that? Can you see Cloudflare is in a tight range of 80 and 75? And so basically a 79 call, and I think it was a 73 put for under $3. And now the market today went through $84. So obviously the 79 call has increased quite nicely. Zscaler, another one that is involved in the industry of what? Cybersecurity. When Fortinet was taking off, this was where the idea came from. And we, going into last week, we're looking at the 182 calls, and obviously at 194 and change, they're in the money by $12. So again, that's what we're trying to do week in and week out. And if you would like to, I'll tell you a couple of other ones from last week. Cardinal Health, that was another one that I identified as a possible good idea. And it was underneath 100, and then basically the 102 calls are now in the money by 7. So that's not a bad thing either. And then, of course, we had the Japanese stocks that we thought would go up, and they did. Alibaba, with the 81 calls, are now over $3 in the money. Hopefully they will keep going. And then JD, another Chinese entity, the 26 calls, they're in the money by $3.50. So again, what we're trying to do is buy strangles when they are, in our opinion, we're looking for ideas that, again, the premiums are fair, and we're going to get volatility. If we get volatility, we can benefit. If we don't, we lose money. Pretty simple. Again, I have a weekly update that I send out. And again, I'm putting ideas out there. People obviously can follow ideas. They can change the strike prices. They can change the expiration dates. You can do anything you want. My thing is notifying you that I see a stock, I see the options in a setup that I think are reasonable, favorable, and that volatility will follow. And that's what I've been trying to do. And I have been pretty happy with how things have been going, because we've had tremendous volatility, right? So that's good. But again, you have to be careful on a bunch of different items that I have to go through. And so I think, like I say, being notified that there could be a setup that might be very favorable is not a bad thing. Do you research news and conference? Of course I do. I look at all the earnings reports and other things that might have an effect on these things. And the way I decide on them is very simple. I have to analyze them that A, the moving averages, the relative strength, and the technicals say something may be happening. The premiums I have to determine are either favorable or not. And then the amount of time we choose has to be ample as well. Again, it's not an exact science, it's more of an art. But again, I have been doing it for decades, so I am putting all my experience behind the idea. And again, these are ideas. They're not recommendations. We don't give advice out or anything like that. This is strictly my opinion and my view that I'm sharing. And again, I think that what I'm talking about makes some sense, and so that's why people subscribe. Again,
Someone also asked how you decide on the picks. Do you want to talk about the
well,
bonus course that comes with the service?
Yeah, again, when you get the service, I want people to know as much as they can about options. So myself and Daniel Sitting of Trading Indicators put together a 3-session, 6-hour masterclass, which goes over an awful lot of options. And I put a lot of my experience right on there. So you're going to definitely learn something on there, I believe. So you get that for free when you subscribe. And then it is a month-to-month situation. Right now, we are giving a $100 discount off the regular price. So rather than $197, it's only $97, and it's month-to-month. So you try it for a month. Again, you'll get a month worth of information. You're going to get the options class to keep. And then, of course, you can unsubscribe if it's not going to be for you. Obviously, I know my job is to keep coming up with ideas that make sense, or else people will not stay. And so I've been very, very diligent in trying to come up with good ideas. This week, we also have something going on with companies like Starbucks, which had a very big move up. And I thought there could be either a acceleration to the upside or a vulnerability of a correction. So there's a strangle this week on Starbucks, and it's already in the money on the put. So I'm happy to say that. But again, we give you a universe of ideas, and then you can obviously pick or choose any you like. You can change the strike prices or expiration dates. You're not locked into one thing, but you are being notified that, according to my opinion, there is a favorable setup there, something that you'd want to keep an eye on. So again, people have been very happy with it so far. And so again, I have to just keep doing my job of coming up with good ideas, and then it will continue. And how many trades per month? Well, each week and during the season, we've had 10 or more. So we've had quite a number of ideas out there, and some range from $1.25 to $100 to $150, and some go as high as $300 or $400. The most I ever paid for any strangle is $500 on the Taiwan semi, but that was only because the stock was expensive and I was expecting a reversion to the mean. I'm very big on reversion to the mean, because that's when you can sometimes make substantial money on a limited risk. And again, everything we do is limited risk. You're buying a call, buying a put. So whatever you put up, that's all you could ever lose. And I find that quite comforting. And in this market, we can get very big volatility. So for that portion of your capital, like everybody else, you get T-bills, you got stocks you don't sell, you got real estate, and then you have something called risk capital. This is what we're identifying to use for risk capital, because again, the risk is limited. And if we catch a good ride like we've had on some of these stocks, obviously the gain can be substantial. And I think that's a reasonable thing to do with your risk capital. So that's why I'm doing it along these lines. You see the link there. So it's pretty simple. It's not heavy lifting. You click on the link, you put in your information. All the data comes from info@tradingindicators.com. So if you sign up here today, immediately in your inbox, you'll get the masterclass today. You can start learning with the masterclass tonight. You get last week's ideas, which will come out again to you today. And it's either going to be in your inbox, or it's going to be in your junk folder, and it's going to be from info@tradingindicators.com. So that's pretty much it. Again, if you have any other questions, I think it's a situation where it could add value to this portion of your capital, trying to turn smaller amounts into larger amounts. And again, I always tell people, if you have 10 ideas there, you don't going to do all 10. You might want to mix it up a little bit with inexpensive options that have a tight window, meaning the difference between the two strikes, and then you might see other stocks like a Starbucks or a Google, which is more expensive, but it may have a reversion to the mean potential, which could unload a nice gain, like it did with Taiwan Semi or JB Hunt or or Apple the other day. So the bottom line is you can kind of mix and match a little bit to create a little bit of an idea, but you don't want to go hog wild any one week, because this is a long-term thing we're doing. There'll be other ideas down the road. So again, use your common sense and whatever you use to manage the risk as far as your risk capital is concerned. And again, whether you're suitable to do any of this or not is determined by your brokerage firm. So, you should go to them if you have any questions on suitability or risk tolerance or anything like that. That's not our job. My job is to come up with ideas that make sense, in my opinion, and that's what I'm doing. So again, yeah, if you click that link there and fill out the thing and hit the complete purchase button, today you'll have the masterclass, and today you'll have last week's ideas, which came out 24 hours ago because yesterday was Sunday, and they come out every Sunday or Saturday. It comes out on the weekend before the markets open.
And if you're watching the recording and not seeing the link in front of you, or if anyone can't see the chat, you can just type in optionprofessor.com/options alerts in your browser, and it'll take you there. Or you can email the option professor at optionprofessor@gmail.com. Again, the link is optionprofessor.com/options alerts.
Okay,
all right.
Everyone got it pretty good?
All right. Yeah.
Okay. Thank you very much, David. And it's always good to talk to you guys out there. And like I say, I hope you subscribe and give us a try. And I hope that you learn quite a bit off the options class as well. Okay. Until we talk again, thanks everybody, and thanks, David.
All right. Thanks everyone. Great discussion. So just a quick reminder: be sure to subscribe to Timing Research on YouTube or your favorite podcast app. Or you can just go to TimingResearch.com to get access to any of the past shows and presentations. And next week will actually be the 10th anniversary of doing this show. So we've had a great run. So this is episode 443. So yeah, 10-year anniversary next week. And hopefully another 10 years to go. So thanks, everyone.